In this video I'm going to show you a very simple strategy which uses pivot levels. Now if you've never come across pivots before, I've got a video that I've already recorded called the hidden levels of support and resistance in the markets. What I can do is link this video to that, so there'll be a link below the video here anyway back to that video, so you can go back and watch that first if you've never come across pivots at all. It'll be worth it. I'm going to go really high level and very quick over it on this recording now, but if you want to go back and watch it in a bit more detail, you can do. So firstly, of course, you'll need pivot levels on your chart. Now these are standard floor pivots, or pivots as they will be known as pivot points. They may be referred to depending on the chart package you're using, and very simple. Just pop them on there. I'm only showing today's because I don't want a lot of clutter behind. I'll show you what happens when you put them on, and you'll need to do that when you come to test it. I'll show you what it looks like then, but it's just too much clutter. I just want to show you very simple terms. Firstly then, the pivots, and I'll just give you some stats because this gives the power behind the actual idea in the first place. Firstly, you've got the pivot point itself. The pivot point is calculated by the high, low and close of the previous period. Now you could, when I talk about periods, you could be looking to trade this over, if you really wanted to, a yearly pivot. I wouldn't do it. Quarterly, you won't get very many. Monthly, you'll get quite a few. Weekly, you'll get many more. Daily, you'll get lots. And 240, you'll probably get even more in those time frames. I wouldn't go below a 4-hour time frame. You'll be really hard pressed, and even on the 240 sometimes you'll find the risk rewards are not that good. So your best times are sort of here really. If you're a swing trader, position trader, the monthlies may be more your suit you better, or indeed the weeklies. If you don't mind a combination of either, the dailies and the weeklies work well together. Right, let's get you the principles behind the trade. So there's the time frames. You need to look at the time frames depending on where you are in the world and see where your pivots are sitting. Mine will be different. If you're based in a time frame that's 6 hours difference, you'll find your pivots are in a different place to where mine are at the moment. So take that into account. You'll need to test it and have a look at it. Also the time frames that you want to trade it. I'm looking at British summertime here, and I would only be trading this between anything that triggers between 8 and 1500 hours. In fact, if it's taken as long as 3 o'clock in the afternoon to trigger, I probably won't even be looking at it, because if it's staying in such a tight range, it may just stay there for the rest of the day and not do either. So you might want to tighten that up a little bit, but instead of 8 and 3, say, well actually I'll trade it between 8 and 2, so if it's not or 1400. So at least it gives you an hour or two, and you've got the rest of the, in my case, the US market to trade through. Right, time periods, time frame to trade it in. Let's move on and look at the principle behind it. The principle behind it is simply the pivot must before you trade this, it must have touched the daily pivot. It's a very key point. It must touch the daily pivot. You may want to pause this, write it down. It must touch the daily pivot is the key thing here. From there, you're going to be trading it and looking at what comes next. I've shared these. It's around about 75% chance, maybe more, that the daily pivot will be hit each day. So there's opportunities here. 3/4 of the time, you're going to be possibly with a trade setup. Unfortunately, some of them might go really early. This particular case went really early, but it's a signal. I'll show you it anyway. Other times you'll catch in perfect timing. The next thing to understand is the probability of the R1 or the S1. So these are just simply R1, R2, R3, and this is the S1, S2 and S3. Probabilities of the R1 or the S1 being hit is somewhere in the region of 45%. The probability of the next area, the R2 or the S2, is around about 20%, and you're looking between 7 and 10% between the R3 and the S3. So straight away you can see that if you're looking for a target all the way up here on a single day, or down here on a single day, it's got less chance of being hit. There's the probability of where the price might be going in the day. But the important thing is here is this R1 and S1, because round about 85% of time, it may be slightly less than that, but around about that time, let's call it 80% of time, the price will hit either the R1 or the S1. So one or either of those, one or the other, will get hit on a daily basis for around about 80% of the time. Now you might want to go back and test this and check it for yourself. So all we need then, if we know that one or the other gets hit, is looking at the price action to see what opportunities there are to trade towards, if it's going one way or the other way, how to get into the trade. So we've got the principles behind it. There's a good chance of either one of these getting hit. So then, as I said, we start building the rules. Rule simple. First rule is it must have hit the daily pivot. Now if it's hit it really early like it has here and starts taking off, and it's sort of late at that, I mean this was the 7 o'clock bar, so by the time 8 o'clock comes it's got no distance. I don't know how far it's going to go. It's only 20% chance of it actually hitting here, so I could set a target down here, but I don't know what the probability is. Lower at 20% either that way or that into the R2 or the S2 here. Probability is low, so I'm less interested in it. Now I'm more interested in either the R1 or the S1. So first things first, make sure it's hit the pivot. Then it's a case of looking for the opportunity to get in. At the moment I'm looking at this as a daily pivot. So I'm looking at a daily pivot with on a 60-minute chart. You can come down the time frames. I like 60-minute charts. It gives me a quicker view. You could come down to a 30-minute or a 15-minute time frame to get into the trade. What you're looking for then is one of two things. My preference, this is a preference, I like to trade in the trend. So my preference would be for it to set up, retrace to the pivot, and then give me a little setup so I can trade it in line with trend. However, you can trade it either way. As I said, there's a probability it'll go one way or the other. I wouldn't try and trade it both ways at the same time, and if it's hit one already, so if it's already hit the S1, don't try and trade it for the R1, because the probability is only around about 20% it'll hit both in the day. In fact, key rule here is if I was looking at this to trade it long, if it's broken halfway between the pivot point and the S1 in this case, I would scrap it because it looks too weak and it's obviously going the other way. So on this, using my principles of trend, I'm really looking for something that carries on in the direction of the movement. I'd scrap this one. It's not setting up anything. I don't care if it comes underneath a little bit. I'm just looking for a break there and a push upwards. Now that doesn't mean to say you want to trade it exactly the same way. You can trade it, and either way I would suggest you test it, which I'll come on to in a moment. But you can look to all you're looking for is some weakness once it's through here. This is a good enough example. What's price done here? It's pulled back, it's broken through, pulled back. Now quite simply I would wait until it's broken those lows at that stage. Then I'd look for that as with the stop placement would be above. I've just used the 60-minute 8 that's on there at the moment, so I'll just pop that on there and use that as the stop placement. Then the next thing is to measure, is there enough return between what you're risking here to what you might get. Personally, as long as it's positive 1.2, 1.3, I don't really mind. Sometimes it'll be more. As I say, it really doesn't matter too much as long as there's a positive. So I'm looking for a positive risk reward. I know that won't suit everyone. You may want to say, well, actually I'll only take them when they're 1.5 or 2. That's up to you, in which case set those in your rule book. For me, I'm happy at 1.2, 1.1 even plus, and I'll take the trade. Sometimes they can be very quick. Now, and other times, of course, they can not only be quick but run through, but you're not, the probabilities of the run through at 20%, that's not brilliant. Right, so what you're looking for is the obvious bit, the probability. So it's quite simple. If you was to be quite happy with going counter, which would be okay, it's some divergence up here, you might say, well, that's fine, it's rolling over anyway, it's got a bit more of a retrace. And as long as you've got a ruling to say, well, actually I want it in trend, however, if there's a divergence, I'll trade it. I'll look to trade it. As it happens, you're not too far off of trading it from the right level, actually, probably a bit early from a divergence. But anyway, key thing here is that it's below the lows here, so it's had a little breakthrough and pull back and then run off. Alternative would be, if I was looking at the long side, it might just find a bit of support right bang onto the R1, onto the daily pivot, and then I just wait for a reversal bar, something just to give me the okay there, maybe a little, as I say, a little bar just up, maybe a little higher low, whatever setting up, it might be anything like that. There's plenty of opportunities. Just the first bar come in, and that's positive. You may just use that. We'll have a look through some examples in a moment. So, and then you simply, if you were doing it this way, you'd be putting the stop just fractionally a few pips just below. Make sure it's not too tight. If it's if the average true range is sitting at 10 pips on here and you start putting it at 6 pips, chances are someone may cough and you get stopped out. So you need to make sure you've got enough range there. If you're using 10 pips, then you've got to be looking at, you're getting more than that in terms of what you're looking at. So the stop placement on something that's running like this is basically, I'll come over to here, it would be just above the movement there, and the entry, oops, sorry, badly drawn, but it would be on a straight line, but although some people might go early, but it should be on a straight line on the breakdown there. That's the signal, that's giving me a lower high at that point, and that's the opportunity to trade it down to the S1. On the long side here, if it had been matching here, bounced off the pivot there, which occasionally would bounce off nicely, then you're just waiting for a reversal bar, stop at the bottom, the break of the next bar, the higher than the next bar, maybe 1 or 2 pips, and off you go. You're trading it to the upside. Target's easy, either way, stops are known. So that's it. Very, very simple. We'll run through a few very quickly. We'll just run through some charts here. I'm just going to run through some other currencies this morning, today. Currencies, that was Euro. The pound, well, the pound hasn't hit either way yet. Really a messy old chart leading into the pivot beforehand. It looked like it was going to be setting, and I was looking at this earlier on and traded it. I did move the stop to break even when it was 20 or 30 pips right away near enough down here. I eventually moved the stop to break even, been stopped out for nothing, so it didn't work this time. So it's a zero trade, it hasn't hit one or the other, but it was as simple as that. That's the pound. Let's have a look at the yen. The yen's a bit more of a awkward one. It's not done anything this morning. I personally won't trade it on the yen much of the time. Some days you'll get a bit of movement, sometimes you just get consolidation, but you've got to decide on the currency pairs you pick. Here's one on the Australian dollar. Now this is a funny old move here, because it might have set you up, and depending on the time of the day you were trading, you might have looked at it, but by the time it was sort of moving up, it's pulled back, got back up above there looking positive, but the target there was too small to be even considered. You can see that visually. Canadian dollar, again a bit of an awkward one. Initially it was chopping all over the place. For me, I don't trade until 8 o'clock, at 7 or 8 o'clock, so I'm really looking at the 8 o'clock. So there's my bar to look at coming through there. So there was a possibility. I didn't like the pattern, so I didn't take it, but I could have put the stop up there, taken the break and traded it. Simple as that. Well, I didn't like the pattern where there's the red bar just beforehand. Maybe that was just, it did only just come back to the pivot. I shouldn't have been so fussy, but there was me. I didn't take it, but that's typical, and that went off and won. So you can see, I've got another one. Where is it? The Euro CAD I was looking at. This was a trade here, and bang! It's this is classic. It did go early in the there was more than one thing setting up here, but on this particular part of it here, it pulled back nicely. It went too early, but it's a classic setup and a classic bit of price action. Again, it's gone the opposite way, but your risk levels can be quite reasonably tight, not too tight. Remember, the pips, a minimum, if the average true range is 10 or 15, make sure you've got enough there to allow yourself a reasonable stop. Here you'd be entering down here anyway, so you've got quite a chunk on it, but you just need to make sure it's enough, and that would be the entry there. Well, target, look, it's already pinged it. That's the EuroCAD. There's plenty of examples. You can then look, I'll put all the pivots on, and I've got an overlay of pivots here, so I'm just going to hide the monthly pivots that are sitting across there at the moment. So here's just the daily pivots, and you can sort of see, okay, didn't trigger that day, didn't set up because it didn't hit the pivot first. Hit the pivot too much, was too small a target. It's very, very pinched the day before. It was pretty pinched this day. horrible market actually on that particular day, just going across sideways. It never touched the pivot until way back here. I'm just looking, it just come back up and tested the pivot. Maybe you'd have been into a trade about midday, and well, you'd have been stopped on that realistically. Here it's gone down for the pivot. It's gone very early. I'm personally looking at 7 or 8 o'clock. It's gone too far, so it won't be. It's broken through. Remember, it's gone halfway between the R1, the pivot, and the S1 in this case already. It's not on for me, and it's too late. Here, if you were looking at the bounce here, well, again, it was quite late as 9 o'clock, 8 o'clock, 9 o'clock. You might have just been into this only for a loss, so yeah, it's a losing trade there. Here, it's tapped in, messed around, coming. You would have been looking at a break of this bar here. It would have happened there 11 o'clock, and off it's gone. Stop would need to be below the low there. You've got more than a multiple of 1 on that occasion. So I'm actually probably using one of the least best pivot currencies, the euro dollar, the pound dollar. You'll find they probably work a lot neater at times, but you need to go and test them. So talking of testing, I am doing just a live free webinar this weekend on Saturday morning, British Summer Time, 9 AM to about 10. It will show you the principles of backtesting. I will use this strategy to give the examples on, so if you want to do that, you can watch it live via YouTube. I'll put it on live. You'll need to just subscribe to this, my YouTube account, I think, to get notifications if you want that. Alternatively, below this video you'll see a link, and you can join me on Zoom properly live rather than the delayed live, and join me for that. But I will go through a bit more detail in terms of the principles that you need to look for in terms of backtesting. The strategy itself here, very, very simple. Won't work every day, won't set up every day. You'll find it works much better on currencies that are a bit more volatile, they've got some movement in them. Again, it's worth testing, and you may just say, well, if the volatility is dropping out the market, I'll just stand aside of that particular market until. And it's very easy to go through the dailies and look at the volatility. If the average true range is disappearing, of course, the great thing about pivots is the pivots will be closer together. But in terms of, it's okay them being close together, but you need to have enough space to actually get a trade out and a target that works. Okay, so that's it. Very simple. One more time, just through it. You're looking ideally at the trend and a move off for me. Alternatively, if you're quite happy of taking the other side, I normally wait for it to break and pull back. I'll then look at the lows there, put the stop over, and trade it down, in this case, to the S1. It must, though, be in my time, so this one didn't run into my time, so I wouldn't have traded it. Simple as that. But you can see the principle behind it. Okay, I hope you find this useful. If you've got questions, pop them in the comment section below. As I said, if you want to watch the day trading, and even if you want some live answers to your questions, come and join me on Saturday morning. If you're watching after the event, there'll be a recording on YouTube somewhere in the live section of my site. That's it for me. Take care. Bye for now.